Welcome to 2 Minutes Global Market Pulse. Let's dive into the top overnight headlines shaping global markets. Starting in China. The Caixin China Manufacturing PMI plunged to 48.3 in May, down from 50.4 in April, marking the first contraction in 8 months and the steepest decline since September 2022. Output shrank for the first time in 19 months, new orders tumbled, and foreign sales hit their lowest since mid-2023. Purchasing activity and employment continued to weaken. But despite the downturn, business sentiment improved, with hopes for better trade conditions ahead. U.S. India trade outlook brightens. U.S. Commerce Secretary Howard Lutnick hinted a trade deal with India could materialize soon. Speaking at a strategic forum, he said both nations are close to an agreement and praised India's early engagement. However, he stressed that reducing India's protectionist tariffs remains critical to achieving a balanced, reciprocal relationship. Over in Japan, the 10-year government bond yield held at 1.51%, as Bank of Japan Governor Kazuo Ueda flagged a possible rate hike. He noted weak demand for super-long bonds and emphasized the importance of short and mid-term yields. Despite some economic weakness, business sentiment is improving, and investors await key labor and spending data later this week. RBA warns of global risk. In Australia, the central bank issued caution over rising U.S. tariffs, warning they could drag down global investment and output. The RBA cut rates to a 2-year low of 3.85% in May, and is weighing scenarios from global trade peace to a severe downturn. Lower tariffs could also pressure traded goods prices, adding to disinflationary forces. Gold pulls back slightly. Gold dipped to around $3,370 an ounce, still near a 4-week high. The safe haven asset surged 2.8% Monday, its biggest daily gain in nearly a month, on the back of geopolitical tension and trade war rhetoric. Meanwhile, Russia and Ukraine's latest peace talks ended without major progress. U.S. manufacturing slips further. The ISM Manufacturing PMI fell to 48.5 in May, its third straight contraction and worst since late 2024. New orders, employment and inventories also weakening amid tariff-related uncertainty. S&P Global PMI revised lower. Finally, the S&P Global US PMI was adjusted to 52 from 52.3, still above 50. Front-loading of orders before tariffs helped boost inventories to a record high. However, delivery delays and cost inflation persisted, though business confidence showed signs of recovery. For more market updates, stay tuned to The Fellow Investor.